does the world have enough oil to offset what we've seen from these Saudi events?
Yes, we do, in that we have these really substantial strategic reserves held in consuming countries. So those are our sort of insurance policy. Those could always be drawn down.
Right. Help us understand what the net effect is, because going into that unexpected incident, of course, Sarah, over the weekend, it's not as if oil demand was holding up.
Yeah.
In fact, they were already asking their members, OPEC Plus, to cut production as well. So is there a rough number that we could sort of work with in terms of what the net effect is to the world?
So going into the weekend, inventories were definitely falling during the course of the summer. So I would not necessarily say they were high globally,
right?
Because they had been coming down, but they were not low. They were sort of a little bit below average. And as you say, oil demand has been quite weak, growing not very much at all this year. So the market has had this sort of bearish cast to it, which of course has been encouraged by the trade dispute between the United States and China, and the threat of a possible recession in European countries, in Asian countries, and possibly even a global kind of recession. So that was sort of had put a bearish cast on the market. In terms of losing this much oil, now this is a very significant disruption. And if they were off 5.7 million barrels a day, according to the ministry on Sunday. Let's say they get half of that back, akin to what the city report says, that's still 2.5 million is still an enormous disruption. Can we replace it? Absolutely. But it's, we're going to have to dip into a lot of different alternative sources of supply.
Virginie, I'm going to bring you in right now. What do the Middle East tensions mean to sentiment right now at a time when we started September pretty risk on? Asia has taken it in stride. Is this just an oil story?
Well, I think it's a little bit early to say, but you could say that if the tension or the fears last for a little bit longer, Trump might get his Christmas early in terms of rate cuts. Because the key really thing to think about is, do we have an oil shock or short-term disruption? There's a lot of things attached to that will impact the market. One is the reaction function, as we've discussed, on inflation expectation and rates. The other one is clearly, how do we balance this disruption with the slowdown that has been noticeable in the global economy, and more recently with the numbers out of China, with IP industrial production in August up 4.4%. And how does the China demand slow down counterbalances, if you want this? And then, of course, is how long is the disruption? And, I'm not an oil specialist, but I would say that if oil prices were expected to be above $70 a barrel, you'd have a supply reaction in terms of shale, in terms of other sources, and other OPEC and non-OPEC members that would come on quite rapidly. So I think you're still in this wait-and-see attitude. That's why the markets are quite nervous. My personal view is that it will balance out. And given the slow inflation environment anyway, we're not at risk of having to reverse a rate strategy, which is the key at this point.
Sarah, Tom here in Beijing. Give us a steer, give us some indication in terms of where you see prices going from here. How much of it is down to whether or not Saudi Arabia or indeed the US retaliates, and how much of this geopolitical risk premium is now priced in to Brent?
My personal opinion is it is not yet priced in. That there was this expectation as of Sunday night that the Saudi Energy Ministry would give an update on Tuesday. Well, we're close to Tuesday now. We're actually in Tuesday, and we have heard nothing. The most we've heard is that the disruption is probably not around 5.5. It's probably closer to 3.5 million barrels a day. That's still a very significant number, and we have no indication that the 3.5 or even half of that would come back anytime in the next several weeks, if not a couple of months. So this is a very big disruption. So I think the market is still sort of absorbing this. I would not be at all surprised to see prices go up from $68 Brent. And if they go up higher, I think there are two ways they can go up. One is sort of the market beginning to believe that this is a little bit longer term disruption. And two, if there's any kind of saber rattling that would suggest retaliation by possibly the United States or Israel or Saudi Arabia.